if you can explain to us the business model of the company.
Core business of Airfloa rail technology is basically rolling stock manufacturing. So when you talk about the rolling stock, we manufacture the exterior components of the rail coaches, passenger rail coaches.
If it is, then if you can tell us what is the kind of broad number of range of products you manufacture.
We have 20 major SKUs that the company manufacture, and total installed capacity of these SKUs is around 8,700 units per year.
Hello, welcome friends. My name is Gorakshekar, and I welcome all of you to another interesting episode of Konexio HighFlyers. Friends, as all of you are aware, we introduce emerging companies from emerging sectors here, and we make it a point to talk to the promoters and the top managements of such companies so that all of us can understand the company's business model, their growth journey, their future growth plans in a much better way. And we get a lot of valuable information in this process, which helps all our investors to take a very conscious investment call. And friends, today we've got another interesting company which is going to hit the capital market very soon. The company's name is Airfloa Rail Technology Limited. And I have the privilege of having the joint managing director, Mr. Dakshna Manikandan, with us. So, sir, welcome to the show, and thank you very much for sparing your valuable time with us today.
Good evening, sir. Good evening.
Yeah. First question, which is very elementary. I just wanted to know, is this a first generation company which has been started by you, or your father started it, then you took over? And secondly, sir, if you can explain to us the business model of the company, what are the kind of type of components we make for the railways, for the aerospace, and the defense business? If you can please share your thoughts.
Well, thank you. This particular company is a first generation company. This is basically initiated in the year 1998 by my elder brother, Mr. Venkatesh, who was a managing director. And I have joined this company in early 2000. And the core business of Airfloa rail technology is basically rolling stock manufacturing. So when you talk about the rolling stock, we manufacture the exterior components of the rail coaches, passenger rail coaches, compressing the entire car body, including but not limited to the roof, sidewall, and end wall, and also the underframe, which is called the chassis. So it's an entire body of the train. And we have another division, which is a furnishing division, which manufactures interior components like the doors, windows, seat systems, flooring systems, and the interior paneling made of aluminum and FRP, and also the toilet system. And we also make the turnkey interiors as an entire kit, which involves design, supply, installation, and then commissioning of the entire coach.
Okay.
When it comes to the aerospace and defense manufacturing, we manufacture ground simulators for advanced medium combat aircraft, which is a fifth generation Indian make aircraft, fighter aircraft. And we manufacture a body for main battle artillery tanks, and we also manufacture body armors.
Okay, fine. Sir, now second question is, if you could tell us in terms of the product SKUs, like do you have any concept like product SKUs for both railways as well as for the aerospace and the defense business? If it is, then if you can tell us what is the kind of broad number of range of products you manufacture, or is it like a package you offer to the customers?
Well, thank you. We have 20 major SKUs that the company manufacture, and total installed capacity of these SKUs is around 8,700 units per year, with the active utilization of around 77%. So when you talk about the product range, when you enter into the coach, whatever you see inside the coach is all ours. That's what I can say. A simple word. So which consists the seats, berths, interior panels, and also the roof ceilings, partitions, and then the toilets. So whatever you see when you get into the train uh, uh, through your naked eye, we manufacture everything.
Okay, okay, understood. Yeah. Fine. So I think now you gave us a very fair and a good idea of looking at the company's product range for railways. Sir, now tell me one thing. We all know that the government of India is now pushing forward for a large investment in the railway infrastructure, specifically as far as rolling stock is concerned. New trains have also been launched like Vande Bharat. Sir, tell us one thing in your assessment over the next, say, 3 to 5 years, since you are a very critical supplier to the railways. So, what is your assessment? How big is this opportunity in terms of growth, and in terms of the total addressable market? And how do we plan to capitalize this growth, going forward?
Well, when we talk about the future of the railway market in India, especially for passenger coaches, now India is now spending almost 90,000 crores for making 800 Vande Bharat trains by 2030. And then we have 32 different metros coming up in the next 5 years. And overall development and then the modernization of the rail industries is expected to be approximately 10 lakh crores basically in the next 5 years. So when you see the business study for the next 15 to 20 years, we have a tremendous traction with an exponential increase of at least 20 to 30% year on year. So when we talk about the different type of coaches or a variant of coaches, it starts from the Vande Bharat, regular Vande Bharat, to semi-high speed trains, to the high-speed trains, metros, and then the regio trains, which connects 100 to 200 kilometer ranges. And we have another business of refurbishment, which is the upgradation of the regular conventional coach to the Vande Bharat platform. That's another 200,000 coaches are there to be upgraded. So when you see business, it's the potential is very high for at least 15 to 20 years.
Okay. Well, I think very nicely articulated by you, sir. Sir, now tell me one thing for each of our product segment, that is railways, defense, and aerospace, where we cater to the customers. Sir, are these contracts awarded to you via a tender basis, or is the relationship with the railways very strong? You get repeat business quite frequently from them. And sir, how does pricing work? Like whenever a new contract comes for, let's say, X number of coaches, which you deliver to the final customers. Sir, how is the pricing worked out? Is it a fixed pricing contract, or do you have some flexible, variability also in case the raw material costs go up, you get a price increase? How does the system work?
Well, first of all, to your question, these contracts are majorly a tender-based contract. So we participate in a tender and then we get the contract. The advantage what we are having is that we have a very strong engineering team where we start work from the beginning of the contract, from the beginning of the tender notifications. Since we have a very strong engineering team and we have been in the business for the last 25 years, and we are supplying more than 1,000 components for rail coaches. So we know in and out about the product, and then we meticulously work for this, and then we optimize the cost so that we get the maximum privilege of getting the major order in most of the contracts. Uh, Secondly, for the price variation class, if there is a price increase or a decrease in the raw material, this contract is already taken care of these particular prices with the class called price variation class, wherein which if there is a drastic increase in the raw material, we have a formula to calculate, and then we increase the price, or the customer provides us the price increase based on the execution of the international market.
Okay. So basically, just correct me if I'm wrong, sir. It means that there is a kind of protection given to you in case the raw material price goes up. Then you are definitely given some price increase to compensate for that raw material cost, right?
Perfect, sir. You are right.
Yeah. Sir, now tell me one thing that, sir, we are a large player to the railways. Our products are accepted and quality is, taken as a very high quality end supplier. But, sir, what is the competitive intensity in our business, specifically because railways is your bread and butter business. It's a large component. So, sir, are there any other players also in the listed space or maybe in the unlisted space who are present, or is it a very closely kind of a group kind of companies that only few companies are operating in this segment? Sir, if you can give us some flavor and some inputs on this, please.
Well, see, we talk about the rolling stock industry. There are various categories of suppliers who are involved in this particular industry. So our area is a very niche area where we concentrate on the turnkey contracts on a larger volume. So we stand between a regular or a standard vendor, and also between a standard vendor and a coach builder, basically.
Oh,
We are not participating in any tender which is a very standard product, basically. We
correct,
select certain turnkey contracts, which is a high volume business, who has got the potential to value add through engineering and manufacturing and supply. So when you
correct,
talk about this particular band, we can count the competitors, uh, by by fingers, basically. So I would say maybe three, four major players are there in the business for this particular big chunk of business.
okay.
One among them.
Okay. So basically, what we do is a niche business. We don't do basically every contract which comes by, and that is the reason that separates us. So now this brings me to the next question, sir. Basically, when you cater to railways, defense, aerospace, these customers demand the highest level of quality. So in what way do we add value add to these customers? Because I do understand that a lot of your business is repeat business because you do consistently good kind of delivery of orders. So tell us one thing, two, three things which are in qualitative terms slightly different and where you say that you do a better job as compared to others in the same industry. So if you can share one or two points which can help us understand your profile in a much better way.
Okay. The growth of Airflow is directly proportional to the evolution of Indian Railways today, where we are, basically. So we started the first metro interiors when comparing to the conventional paneling. We have introduced new materials, and until now we have been using this interiors for almost 15 years. So we did the first air conditioned EMU in a different design, and we made the design, and then we did that. It was really appreciated by the then railway ministers at that particular time, and then it was very well appreciated by the Indian Railways in 2016. In 2017, we did another design for making the interiors, special interiors for Sri Lankan demo, which was being compared, which was compared with the Chinese interiors, and we have got a great name as a country. India has got a great name by involving a lot of engineering product into it, and the facelift to the train. And then in 2020, again, we got the major contract, subsequent contract based on the performance of the coach, and then the quality of the interiors. And we also got export order to Mozambique, which was again appreciated by the government of Mozambique and then the government of India. So what I'm trying to say is that this evolution, it started from 2001, basically. And then the last 25 years, when you see the coach, upgradation of the coach in terms of materials, in terms of quality, in terms of the finish and fitment, uh, you can see a good organic growth in the industry. And the quality has also increased over a period of time. And now Vande Bharat is a benchmark for this particular product. So Vande Bharat has now come from the same integral coach factory, which was there almost, it's a 150-year-old company. So now we are manufacturing a global standard coaches as per a global fire norms and then other fire standards.
Okay. I think very nicely articulated by you, sir. The designing part, I think, is the heart of the soul. So I think, please correct me if I'm wrong, but this is a clearly an R&D engineering designing business where you need to work more on the creativity part. Because normally for rolling stock, not many people know that what is the effort and what is the creativity which goes behind the designing. So that is really nice what you told us. Sir, now one question which I wanted to ask you, which appears in your prospectus. Sir, we understand that you have got another subsidiary company which is into the same business. Now, what is the purpose of having two separate companies for the same business? I mean, was this company made earlier with some objective and now after going public? What is the strategy for this company?
Okay. We have another subsidiary company predominantly to concentrate on aerospace and defense. Thing is that we are adapting a formula of indigenization and innovation. So when it comes to the defense and aerospace, when you talk about the innovative product, it is a long gestation period business basically. So which we require a lot of money to be involved, and we need to wait for a long time to get the output out of it. So what we have planned is basically there are certain tenders, which is a long gestation period tenders, which we want to take it in our subsidiary company to concentrate entirely onto the defense business, so that our core area of railways may not be affected, and then the turnover and the cash flow may not be affected. Because of this, we started a separate company to concentrate only on the defense area, where the gestation period is very high. So we are very specific in selecting the tenders. If it is a tender which is having a very long gestation period, then we will be participating in a tender through our subsidiary company. That's the reason for bifurcation.
Basically, sir, what I understand from this is that only for projects which have got very high gestation projects, I think the subsidiary will come and manage those projects. But otherwise, normal business which is done now, that is not going to be shifted to the subsidiary. That will be done by the listed entity only, right? Yeah. Sir, now we also have three other companies. I was just reading your prospectus, sir. We have got companies called Norton Private Limited, Barani Engineering, Apurva Energy, and Stack on Aeon Engineering. Now, if you can give us some idea, sir, what do these companies do? Are they related to our railway business or the defense and aerospace business? If you can give us some inputs on this, please.
Yes, sir. So these companies are all started by our promoters in their names, and predominantly to concentrate on various other areas, namely regular fabrication, and then edtech business, and then the automotive business, and then the renewable energy business. And this acts separately and independently. This has no connection with the Airfloa rail technologies, because we are permanently concentrating on defense and aerospace, where there is no conflict of interest anywhere.
Okay, understood. Fine. So now let's come to the financials. I was just seeing your financial number for FY24. Sir, top line is almost close to about 119 crores compared to 95 crores. Profit after tax is 14 crores compared to 1.48 crores. Now I want to understand, sir, what is it that made the profitability jump so significantly? From hardly 1.5 crores, we had a profit of 14 crores. So any specific reason why the profitability showed such a dramatic and a significant improvement? If you could please tell us.
Yes, sir. So in 2022-23, our company have taken a strategical decision that we'll be concentrating on only new technology project, or a project which is having a better margin, basically. So what we did was we were concentrating on almost 300 tenders previously. Now we have reduced to only 50 to 60 tenders for an entire year, which is having a better margin, and also the latest and then the future generation trains like Vande Bharat. So we started manufacturing only products for Vande Bharat now, and now this traction of Vande Bharat is going very high, and it is also not only Indian Railway who is manufacturing the Vande Bharat nowadays. It's other companies like Titagar, BEML, TMH, RVNL. They're all also manufacturing. So the business parcel is now becoming bigger. So the idea of Airfloa rail technology is to concentrate on a future business rather to concentrate on a conventional business with a slightly higher margin. So
Okay.
that's the reason we have reduced our, we have restricted ourselves with 119 with a good bottom line.
Yeah. Sir, I just wanted to understand what is the current employee number as of now with us?
It's approximately around 250 to 270 people working for us.
Okay, 250 to 270 people. Fine. So now I just wanted to understand. I was just observing your FY24, financials. I was seeing that top line has increased from 95 crores to 119 crores. As you rightly mentioned, you focused on more value-added kind of business, so that gave you better margins. But sir, we saw that the employee cost has come down. Any specific reason why it has come down? Because it has come down from roughly 12.5 crores to 9.5 crores. Now, any specific reason for that?
Yes, after COVID, we were consistently concentrating on streamlining the systems and functionaries, and also we restructured the entire system so as to concentrate more on the production base and also to reduce the cost of overheads what we were doing because after COVID and price increase of raw materials, we were forced to do all these measures, and luckily we have. Reduced a lot of manpowers and unnecessary expenditures in certain areas.
Okay.
There we reduced the labor
Okay.
investment drastically.
Okay, fine, understood. So now coming to your numbers for FY25, that is March 25. If you can give us some idea about what is the top line, what is the profit after tax, because now we are already in the month of August. So if you can share some broad numbers for our viewers, please.
Yes, we have increased our top line by almost 60% of the last year top line.
Okay.
And then PAT of approximately 12 to 13%.
Okay, fine. So anyway, I think it means the solid momentum continues even in FY26 also. That is a good thing. Sir, currently, what is our order book as of now?
As on July 2025, it was around 265 crores. And
Okay.
this year we got almost 110 crores. So if you add, as on date, if you add it, it would be around some 370 crores with us right now.
Okay. And sir, 375 crores order, typically what is the timeline where you expect these orders to get converted into revenue? Like any rough kind of timeline?
It is approximately 6 months to 15 months.
Okay.
And also, I just want to highlight that we participated in tenders approximately 1,450 crores now with very conservative expectancy of 25 to 30% of business for us. So this is in fact this we can envisage in the next 1.5 to 2 months from now.
Okay. Okay. Fine. Understood. Sir, basically, in our business, what is the broad working capital cycle? Because you deal with government customers like railways and defense, typically where the payment cycle is normally quite elongated. So, sir, what could be the normal working capital cycle right from the time you execute the order, the customer makes the payment to you? So, what is the typical working capital cycle time for us?
Okay, we predominantly concentrate on two area of business basically. One is the product supply, the other one is the project supply basically. When it comes to the product supply, it is approximately 60 to 90 days where we will rotate our working capital uh, in a cycle manner basically. And we are also doing the turnkey contracts where the gestation period is bit long.
Yeah.
So at least we'll be billing at least every 3 months once or something like that. So
Okay.
it is more. We are working on two cycles: one smaller cycle and then the bigger cycle.
No, I think your point is absolutely right, because I was just seeing your receivables. Now I think it is very clear what you told me, that you all are working on two types of receivable cycles. The turnkey project cycle seems to be quite long, because if you see on the face of it, sir, almost 80 to 85% of your debtors account for your revenue. So it gives a wrong picture, but that is probably the reason. The turnkey contracts take a little more time for the payments to come. So that is
Yeah, because
understandable.
it's a long contract, and we need to supply the entire systems to the train, and then only we
Yeah.
get once we supply the product, then only we get our payment.
Okay.
So,
Okay.
so that is how it goes. But
Okay.
when you see our books, it is all good debts. It is 85% of our debtors are less than 180 days.
Okay. Okay.
Yeah.
No, no, understood. Sir, and another thing which is very relevant is that railways are definitely a very reputed customer. So, your money will definitely come. It takes a little more time, but at least the fact of the matter is that this is a customer which will always honor its payment at all points of time. So that is
Perfect.
fine. Sir, now the most important question for today, sir, we are going to make the company go public very soon. Sir, what is the main objective of raising money via the capital markets, and how much money will you be raising via the capital market? If you could please tell us.
Okay, we are planning to raise approximately 90 to 92 crores, predominantly for a working capital to an extent of around 55 to 60%. And
Okay.
then we have capex for approximately some 15%. And then there is a repayment of borrowings to an extent of 4.5 to 5%. And then general corporate expenses for almost 10%, and then IPO expenses approximately 9 to 10%.
Okay. Sir, one question which I wanted to ask you is that in our industry, in our business specifically, what is the normal asset turnover? Because I believe from the public issue also some small part of the money goes for some machinery, some part of it is for working capital, and some part of it basically is for general corporate purposes. But for the machinery which we are adding, sir, typically for a new machinery, what is the asset turnover in the first 2 3 years? Like, can we say comfortably that whatever machinery we are using now, the asset turnover is very healthy, because it's an old asset. It is now taken at historical values. But for any new asset which is put in the system, typically how does the asset turnover look like in the first 2 years?
Uh, I mean, to start with, 4 times to 6 times is what
Okay.
we can increase. So to start with next year, because since we are in the mid of September, so we'll be receiving the maximum machineries by end of this financial year, because six months
Okay.
easily it will take. So when we
Okay.
talk about next year, I would say like around 5x, around 4 to 5x.
Okay, fine. 4 to 5x
Yeah.
is the normal kind of asset turnover which you expect. Okay.
Yeah.
I think these are very typically very healthy levels. Sir, now tell me one thing, that since you have promoted the company along with your brother, sir, on a functional role basis, sir, what is it that you do in the company? Do you take care of new clients, or do you nurture existing relationships? What is the functional area which you manage in the company?
Well, we divide our responsibilities for a betterment of the company. So, Managing Director Mr. Venkatesh is the overall in charge of the production and the finance, and I take care of the marketing and the technology design and development. So
Okay.
this is
Okay.
my core competency in this particular area of business, and we
Okay.
have a very strong structure who is behind the screen, who takes care of the entire industrial growth in a very strong way.
Okay. Okay. Understood. Sir, now one question, from the investors' point of view, people have seen the financials of your company. They've seen the kind of bandwidth, you enjoy in the industry, the kind of relationships you enjoy with the railways and the defense sectors. Sir, tell us one thing, that now since company is going public, it's a historical milestone in the history of your company. Sir, what would be your broad message to the new investors? Because everybody expects returns, but on a very longer term basis, sir, without giving any number, if you can give any small message to the investors.
Well, see, right now we are a system integrator of rail coaches for Indian Railways and other railway manufacturing companies like Alstom, Siemens, Titagar, RVNL. So now the business is open. As I said, like there is a clear vision for the next 15 to 20 years. So when you ask this question conservatively, I would say that year on year growth with this particular traction, we would be reaching approximately 60 to 70% for the next 3 years
Okay.
from the turnover what we are now achieving.
Okay. Okay.
So
Fine.
what I mean to say is that 25, 26 would be at least 60 to 65% growth, and then 26, 27 would be another 60 to 70%. The reason why
Okay.
I am highlighting this is that we are now focusing on a technology product, tech product, which is
Ah,
which is which is having a less competition, and of course the risk is involved. For that, we have already tied up with renowned companies to get the know-how and do manufacture here in India. So the margin would be better, and also we are expecting a major orders from the defense where the bottom line would be much more higher, and
okay.
also the top line would be
Fine. I think so. I think very good days, ahead, which is very good news for all the shareholders. Sir, last question today for this interview is that, sir, how do you look at the business risk in our, industry? Like, what is the most important risk which you monitor every day? If you could please tell us.
Yeah, see, the most significant risk for our business is the high dependency on the government contract, and it's a tender-based orders, okay, particularly from the Indian Railways and defense. While this ensures a steady demand, it also exposes us to the risks such as the policy changes, delays in approvals, slower payment cycles, and increased competition in the tender holding. However, we are mitigating this risk by gradually diversifying into the non-governmental clients, expanding our product portfolios, and enhancing the operation efficiency to remain cost competitive, especially when it comes to the technology product. As I said, like we are concentrating on the technology product and also the aerospace and defense area, where predominantly we are concentrating on indigenization of the products through Make in India initiation. Thereby, we envisage that we can resist the risk by our engineering capabilities and also our strategical move of concentrating on technology product, high-end products for both the railways and aerospace. So I'm very sure that government is not going to stop making trains for at least next 30 years, because the demand is so high and we are not meeting up the demand consistently. So I feel that the risk is very, very, very negligible.
I think very nicely articulated, and sir, you are right in saying that the runway for growth, both on the railway side as well as the aerospace and the defense side, is very large. And I think good execution, good quality will finally help you grow faster in future also. So sir, it was my pleasure to host you, sir, and our investors will enjoy this interview because a lot of valuable information was shared by you today. Sir, please accept my best wishes to you, your entire management team, and sir, best wishes for your forthcoming public issue also. Thank you very much.
Thank you. Thank you so much. Thank you so much.